If you own a rental property in Los Angeles, duplex, triplex, fourplex, or small apartment building that you've owned for decades, and you're thinking about selling, stop and watch this video first. There may be a way to sell your property, defer your capital gains taxes via a 1031 exchange, continue receiving monthly income, and never deal with another tenant again. Most landlords have never heard of this strategy. The ones that have usually wish they learned about it years earlier. I'm Derrick Ruiz. I specialize in Los Angeles investment property for more than 40 years. During those 40 years, I've had the same conversation with hundreds of landlords. Derrick, I'm tired. They're tired of tenants. They're tired of midnight repair calls. They're tired of property management. They're tired of the LAHD inspections. They're tired of SCEP. They're tired of REAP. They're tired of habitability claims. They're tired of insurance increases. And they're tired of rent control and Sacramento and Los Angeles changing the rules every single year. They want to retire and enjoy life, but they feel trapped because selling could trigger a huge tax bill. When they meet with their CPA, they hear the same words over and over again: capital gains, depreciation recapture, California income tax, net investment income tax, also known as the Obamacare tax. Depending on the property, that tax bill can easily reach several $100,000. So instead of selling a property they no longer enjoy owning, they simply keep it. Now, I ask one simple question. If you could sell your building, continue receiving monthly income, never deal with another tenant again, and you could defer your taxes, would you? Almost everyone says yes. Now, a lot of apartment owners over the years that I've known have transitioned from residential rental into triple net commercial property. I actually like triple net properties a lot. Imagine owning a property leased to Starbucks, AutoZone, Wells Fargo Bank, In-N-Out Burgers. Commercial triple net leases require that the tenant pay property taxes, the repairs, utilities, insurance, and most of the maintenance. It's very hands-off for triple net commercial property owners. Now, instead of managing a bunch of tenants, you're collecting rent from a major corporation. Another benefit is a property doesn't have to be in Los Angeles or even California. Now, here's why triple net commercial property doesn't work for everyone. The problem is high quality triple net commercial properties are expensive. Now, maybe you can get a small Dollar General or Family Dollar type, property in a rural area for, maybe 1.25 million to 1.5 million. But investment grade properties leased to companies like Starbucks, Wells Fargo, AutoZone, or an institutional medical office buildings often cost $2.5 million or more. Most small mom and pop apartment owners don't have enough equity to purchase one of those triple net commercial properties leased to a major corporation. They just don't have enough cash when they sell their building. And a lot of my clients that are in their 60s and 70s, they don't want to take on a commercial loan. They're done taking loans out. They're retired. They're not making as much income. They might not even qualify for a loan. So sometimes they look at cheaper commercial properties, maybe a small strip center with Joe's Tacos, a nail salon, and a liquor store. Now, those may be good local businesses, but they just don't have the financial strength of a national corporation. If one tenant leaves, that commercial space could sit empty for months. A lot of these small businesses, they're just not that stable, and it's very common for them to go bankrupt or just go out of business. If you own rental property in Los Angeles and you're dealing with SCEP, REAP, tenant issues, or rising costs, you're not alone, and you need to understand your options. I put together a landlord website and a landlord guide to SCEP and REAP inspections to walk you through all of your options. Go to derrickruiz.com, scroll down to start here, and choose your situation. Whether you want to sell an apartment building, you're dealing with SCEP inspections, REAP violations, you want to know about tenant laws and evictions, you want to know more about insurance and rising costs and what you can do, how to avoid habitability and liability risk. If you want to know more about the Section 8 lawsuits and stuff that's happening, go here. And if you want more information on rent control and tenant restrictions, check out this information on my website. Very helpful for landlords. And let's get back to the video. So there is a solution to somebody who wants to invest in high quality triple net commercial property. How do you own part of a Amazon distribution center, or an interstate travel and gas center like Buc-ee's or Travel Center of America, or maybe a brand new outpatient medical office building without buying the entire property yourself. That's where the Delaware Statutory Trust, a DST, comes into play. A DST allows multiple investors to own fractional interests in institutional quality commercial real estate while still qualifying for a 1031 exchange, thus deferring all your capital gains taxes. Instead of replacing one apartment building with another apartment building, you can exchange into professionally managed triple net commercial real estate designed to produce passive income. You still own real estate, you still receive cash flow, but you defer your capital gains taxes through the 1031 exchange. You no longer have to deal with tenants, maintenance calls, leasing, or day-to-day management. Now, one reason I'm talking about DSTs now is because recent tax law changes have made DST investments even more attractive to investors. Many DST sponsors perform cost segregation studies that generates significant depreciation. So instead of depreciating a commercial property over, say, 37 years, they can squash that depreciation schedule down to about 15 years, which means you get to write off a lot of depreciation every year, which helps shelter the income from taxes on the passive income that you're receiving. Whenever I show this information to a CPA, they generally say, man, this is a great deal. You're getting passive income, you're not paying capital gains taxes, and a lot of your income is going to be sheltered because of the cost segregation. Now, depending on your situation, that depreciation may help offset a portion of the income you receive. Like I said, some of that passive income will be sheltered. Now, every tax situation is different. So this is something to discuss with your CPA or qualified tax advisor, your tax attorney, etc. Now, who is this for? This strategy may be appropriate if you've owned your rental property for a long time. You have built up significant equity, but you're tired of actively managing tenants, but you still need income. You got to live somehow. And you want to defer your taxes on a 1031 exchange. You'd rather spend your retirement traveling, playing with your grandkids, or other activities that you enjoy instead of dealing with tenants. Now, DSTs are generally available to accredited investors only, and they are not appropriate for everyone. Now, if you're wondering whether this strategy makes sense for your situation, I'd be happy to have a conversation with you. I put together a free guide explaining how DSTs work, how the 1031 process works, and the questions you should ask before making any decisions. Click the link below to get your DST guide. And I also have a bonus PDF for you to look at. It's the story of how my 87-year-old client sold her Mar Vista duplex and did a 1031 exchange into a DST property. What she invested in was a brand new shopping center anchored by Sprouts grocery stores. You all know about Sprouts. They're one of the leading healthy grocery stores in the country. Anyways, she had a fixer-upper duplex. One unit was vacant and it was a fixer, and she couldn't get it together to get it fixed. She was only getting about $1,400 from the one bedroom on the other unit. And we sold it for about, I think it was $850,000, $900,000 or something like that. And what she did is she did a 1031 with all of her money, and she bought into the DST that was the Sprouts grocery stores. Her income went up to over $4,000. She went from 14 and change up to about $4,000, deferred all of her capital gains taxes. This property, this DST is in her trust, and she has got no more property management headaches or maintenance or utilities or insurance, nothing. She's super happy. She can relax. She gets her $4,000 a month. It's in her trust. She is, when she's no longer with us, that property, that DST, is going to transfer to her niece and nephew, her heirs, without probate because it's in a trust. And then the heirs are going to get a step up in basis, which is another conversation, but they're going to be in a great shape when they inherit this property. So again, DSTs are not right for everybody, but for the right person, they are an excellent vehicle for getting out of property management, getting out of dealing with tenants, no more dealing with the city and inspections and stuff, deferring your taxes, and receiving monthly income that's sheltered by cost segregation. So If you found this video helpful, please subscribe, leave a comment below telling me how long you've owned your property. Now, I got to give you a quick disclaimer. This video is for educational and information purposes only. It is not legal, tax, accounting, financial, or investment advice. DST investments and 1031 exchanges involve risks and may not be suitable for everyone. They are generally available to accredited investors. Always consult your CPA, attorney, financial advisor, and other qualified professionals before making any tax or investment decisions. I and eXp Realty are not providing legal, tax, or investment advice. Past performance does not guarantee future results. You know, we're going to put those legal disclaimers in, folks. So if you found this helpful, you want to have a conversation, reach out to me, shoot me a text or email, or give me a buzz on the phone. I work with some really good DST sponsors. Right now, the one that I like is the Travel Center of America. These are new glorified gas stations, kind of like Buc-ee's. You know, they've got 50 gas pump under canopies. They service all kinds of diesel semi trucks and interstate travelers. They have showers for the truckers. They have all kinds of food options, restaurant, dining. I mean, they're really, really popular. And right now, I think these are really good investments for the right person. But of course, check with your own tax advisor. If you want more information, like I said, hit me up. I'll send you the info. Again, this is Derrick Ruiz, eXp Realty Commercial, apartment broker and expert. Look forward to helping you soon. Take care, everybody, and thanks for watching.